Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 5th of November. All right, now, as we come into the Asian Open, you can sort of get a good idea of where everything is, and you can start to sort of see what's been going through the market. Now, just on the face of it, you would be, let me see my pen on. You're having a look here. Obviously, the Aussie's higher, a little bit of sideways activity, and then drifted lower. This is a bit of a culmination of Friday trading across all time zones. US dollar against the yen closed on its sort of highs. On the euro, dipped lower and then sort of started to trade sideways. And pretty much the same for sterling, although we have got a bit of a gap here this morning, and I'll come to that in a second. And dollar CAD, well, we had the US and Canadian employment numbers, bit of a shoot down, shoot up, and back to where it was, okay, which is very common for the numbers. Now, the main part of starting to trade is trying to work out, okay, what caused those moves and what happened. The easiest thing to do is come back a lot across to your economic data, right? Just have a look, see where the major numbers were. So, obviously, Friday, it's all about the non-farm payrolls. We did have the Canadian numbers down here as well, but US non-farm payrolls affects all major currency pairs. The payroll change, I'd say very positive result. Okay, an extra 60,000, but it's just the shine of that was taken off a little bit by the revision, just under 20,000. So an extra 30,000 overall is the change. Private payrolls up. Then the rate was consistently that's good. Okay, the average earnings, even though it came out as expected, it is stronger than the previous month. So that's another sort of slightly positive tone. Although the market does just concentrate on the forecast versus the actual. So US numbers were strong, not as strong as you think, but they are still somewhat strong. And then you come back and you go, okay, so the US dollar's rallied here. And it was on the back foot somewhat during the Asian session. I'll show you that in a second. I mean, the dollar against the yuan got absolutely hammered. And that's clear intervention by the People's Bank of China. But looking at the major currency pairs, so the US dollar through the Asian session, okay, got absolutely butchered, right? And that sort of saw, well, dollar yen didn't really do too much, but saw euro rally, Aussie rally, sterling was already rallying as well. It's already up there. Well, I guess if anything, dribbled off on dollar CAD, but didn't really go too far. Now, if I just give you a look at that price activity, now we were sort of waiting for this, right? And there was no real time frame when the People's Bank of China were going to jump in and intervene here. But it did hit 6.98, and then it's dropped, 13 cents. Okay, that's a massive move. Now, don't forget the tariffs to me haven't even really started to impact. So this has got to be higher. I think the market thought that Friday start of the Asian session and it bounced a couple hundred points, and that was short-lived, and they gave it another flogging through the day, and that's where and that's really impacted the value of the US dollar. So to me, the US dollar index, okay, would probably be a little bit higher here, just on the US numbers, let alone the gapping in, well, sterling, which is about 13% of the basket, is pushing the US dollar down. So this isn't US dollar weakness. It's actually other currencies just rallying against it. And this is a very short-term fall in the US dollar against the yuan. That can't last, even though Trump will think he's won a small battle there. That will bounce for sure. And that's going to come into play as they introduce more tariffs. Right, so let me just come back across to where you can actually see what's going on. Now, on the major currency pairs here, there's a few things going down. Aussie sideways, Kiwi still a bit sideways to start the day, dollar yen also, euro, and then you've got dollar CAD, and then you've got this calamity here in the middle, which is sterling. Now, there's been a few different reports here, but if you have a look, this is why, we don't encourage at all open positions over the weekend. Now, it closed around 129 sort of 70, 65, 70, and opened up at 130.25, popped up to above 60, and is back to around 130 the figure. So this is this gap here was created once again by random bloody newspaper articles. This one out of the UK Times, which you would think would be reputable. They're sort of saying we're on course for a partnership. all the things in Brexit that were sort of up in the air are getting closer to being finalised and good for the UK. And then at the very end up here, a spokesman for May's office said the article is purely speculation, and that's it's just hard to trade that stuff, and it's fictitious. I mean, imagine if you had access to the journos, you could actually get anything printed. So the gap was basically on the news on the Sunday article in the Times that the deal was closed and the Northern Ireland border was going to be sorted, and then they've come out and said no, it's all rubbish. So it's back to not quite to where it was, which it needs to get back down to here. I wouldn't be surprised to see it back at 129.70 at the start of the European session, unless we get some other sort of news out. So that's sterling, right? Starting the week on Monday, you don't want to be sort of messing around with that. It's a little bit too hard for my liking. And we've got a little bit of a tricky situation here on a number of the pairs. If I just come over here to the technical aspect and go to the daily charts here for the majors, we've got a couple of these currencies like the Aussie, right, shot up through the daily charts and it's really pulled back on itself. This is because the fundamentals, right, are strong in the US and neutral in Australia. So this is like a stop-loss run. I think we're going to see this on a few of the pairs. We've had a bit of a dip down here in euro. I still actually like the euro lower. Sterling is now sort of just banging away sideways in a big, broad range. It could end up at 135 or down at 125, depending on what article comes out. Dollar CAD still trading sideways. Dollar yen in a slight uptrend, but sideways the last probably three or so months. And that's where we are. This is starting to get a little bit tricky on the in the technical picture, right? If I just come back over here, take you to the MyFX Trading Hub, you'll start to see that when you come down to like the trading situation, like usually if the fundamentals were riding clear, those US non-farm payrolls should have seen the US dollar rally against everything and hold that rally. At this point, they haven't gone too far, and they look like they may sort of get back some ground. Then you come back down here to the technical aspect, and I'm actually thinking of tuning this up because this is a combination of the overall fundamentals and technicals. Now, fundamentally, for each country, this is the sort of general proviso. So I've got a combined sideways activity here for the UK. Now, UK fundamentals are strong. Technically, it's a dog's breakfast. It's messy as you like. And that's why it's sideways, because it could pretty much go anywhere. Whereas I like the technical aspect of euro. It looks bearish, bullish for the US dollar index. Economically, fundamental, like central bank, and technically, it does to me, on the daily and weeklies in particular, it's going up. The only thing that's holding the US dollar back at the moment is weird geopolitical stuff and the intervention that the Chinese were doing and the crazy moves that we're seeing around Brexit, which is, sterling rallies. Of course, the US dollar is the other side of that equation. It drifts off. So short term, the US dollar is being held down by a few arbitrary events. If they clear up, this thing should shoot back to the top side. And we've got the old safe haven dollar yen just trading sideways. Dollar CAD has been pulled and pushed from the US dollar, oil price, and then mixed Canadian fundamentals. It's sort of still sideways. And dollar Swiss is just hanging on to a bullish framework on the technicals there as well. So the major changes here from Friday are the Aussie and the Kiwi. Now, both have broken sort of daily trend lines. So they're major trend lines, but they've pulled back on themselves, more so the Aussie. And to me, it just looks like a stop-loss run, because as soon as the US fundamentals kick in, the Aussie and Kiwi fundamentals are pretty much neutral. That will just come straight back off. And these two currency pairs here, right, massive influence from the yuan, right? This big move in China, right, where it's rallied, as I said, 13 cents. That's put upward pressure on Aussie and Kiwi. Now, that should move back to about 6.98. You'd expect Aussie and Kiwi to fall back. So basically, geopolitics screwing up the Aussie and Kiwi somewhat. Also, sterling. We're starting to see really the best, and the currencies that make the most sense to me are the euro and the dollar index itself. Dollar Swiss also a secondary sort of pair for the US dollar. Now that's starting to look like a little bit tricky there with all the colours and things. So what can we do to try and pick the eyes out of this? Well, to me, the focus has got to be on euro, okay, a bearish perspective. And the US dollar, to me, is very strong. So I'm looking to get long dollars against these other pairs that make a bit of sense. Now, Aussie and Kiwi have artificially been pushed to the top side. So potentially a breakdown in the Aussie and Kiwi, to me, looks like potentially a good opportunity. More so the Aussie. The Kiwi is a little bit higher. And I'm just going to leave these other currencies alone. So when I've come back to look at those specific pairs, I'm looking at basically what's coming out and where can I attack the market. Now, Monday, UK services PMI. This is a very robust number. But once again, we've seen the gapping in the market from the Brexit news over the weekend. This may pale into insignificance on Monday. We've got Poloz speaking, the Bank of Canada governor, on Monday. He's talking about monetary policy and the impact or the economics and impact on monetary policy. That's probably going to be pretty important to what he's got to say about that, and could influence the CAD somewhat. Now, to me also, the US non-manufacturing numbers are probably the main event for Monday for me. The markets will have time to reconnect across Asia and Europe. We come into the US session, we get a robust US number, and that could give us direction to start the week. And that's where I'm really going to be focusing on that US number. All right. So what we're looking for is if we get strong ISM non-manufacturing numbers, it should support a strong dollar move across the board. And as I said, if you're looking for pairs to trade, you come down to the overall perspective. And to me, especially the Aussie, a move back down. If China moves, dollar yuan moves back up, that'll probably be the key pair, the dollar index, of course, and also another move down on euro. And that's where we are to start the week, guys. It's a little bit tricky just to open the week with that UK articles in the Times. But then you come back down here and you have a look through the upcoming events for this week. We've got a huge amount of economic data coming out across all time zones. So as you scroll down through the data, you'll be able to match up what data fits in with your time frame, wherever you may be. Don't start chasing it all across the board here. But the RBNZ will be quite interesting there. Obviously, the federal funds, the Fed, hugely important. And then you come back down through the week, there's still more UK and US data. So huge amount of data to go through. No need to jump in straight away on Monday. If you want to get yourself a little bit caught up and bent out of shape, then jump in to trading first thing in the Asian session. You're bound to find yourself in a little bit of trouble. As you can see, Aussie is just banging away around that trend line with no specific direction. The Kiwi, well, it's still rallying. It's just trading sideways. It looks like it's found fair value here and just needs an extra push. Dollar yen's finding traction around that resistance line, up around 113, 15, 20. Euro sort of seems to be finding some traction around 114, the figure. Sterling, well, that's anyone's guess. To me, it should move lower back to where it closed on Friday. And dollar CAD just banging away sideways. That's pretty much where we are to start the day, guys. It's a little bit tricky, but just let the currencies open up. Let them regain the momentum from Friday, and then we'll start to see where the trades are as we go into the European, North American sessions. And as you can see, the equity markets, a little bit of weakness there on Friday, and that's leading into the, as you would expect, leading into weakness in the Asian equities, into the Nikkei and the TOPEX. We'll see how that goes. But this is probably more so to do with, actually just to finish up, with the general news that was coming out at the end of last week. You've got Trump talking about more tariffs potentially, also potentially a trade deal, all sorts of stuff with China. So I don't know where that's going to go. It doesn't seem to me like the Chinese want to do a deal. So we'll see how that plays out. Brexit impacting sterling, et cetera, et cetera. So really speculative trading at the moment, waiting for clearer conditions as we start the week. And that's why I'll be giving the markets a bit of room to move on the, especially through the Asian session at the start of the European session before I start to get involved. All right, guys, that's the FX Market Insight for today. I'll see you in the live trade zone. Cheerio.